Welcome friends, Asli Bania welcomes you once again. Today we have brought you another multi-bagger stock. The stock name is Iron Exchange Limited. This company is in the industry of basically water, and the company is improving its scale of operations globally, and with the Prime Minister's dream to put piped water, drinking water in every household. So this industry is going to grow manifold in next coming years. Let's see what this industry holds and what the company holds for all of us. Now this is our standard disclaimer. So I am not a SEBI registered analyst, and I have prepared this video for educational purposes only. Before investing in this stock, we always suggest you to go to SEBI registered advisor and then invest in this stock. Will not be liable for any profit or loss for trading in these stocks. Now coming to Iron Exchange Limited. Iron Exchange Limited was formed in 1964, and basically it is a pioneer in water, wastewater treatment and environmental solution, and caters to various industries, homes and communities. The company is headquartered in Mumbai. It has 6 manufacturing plants in India and one each in Bangladesh and UAE. The company has completed around 1 lakh installations, which is a very big thing, and in 500 plus sectors. So now we'll discuss the company segments. Company basically has 3 segments which they have classified in 3 verticals, like engineering, chemicals and consumer products. So engineering is the company provide integrated solutions to water and wastewater treatment, including seawater desalination plants, recycling of water, and like for manufacturing plants, the zero liquid discharge plant, to various industries, various level of industries. The chemicals, the company provides a comprehensive range of resins, specialty chemicals, and customized chemical treatment programs for water, non-water, and specialty applications. Now coming to consumer products, this company is the one who holds the Zero B brand, and everybody has heard of the Zero B brand from their childhood. So even I have heard of it. So the company caters to individuals, hotels, spas, educational institutions, hospitals, laboratories, railways, and defense establishments, providing safe drinking water, like water purifiers. Coming on to the quarterly results of the company, if you see in the last 3 or 4 quarters, the top line has grown very good. The company's margin have been improving, which we'll see in the next slide. And what has happened, if you see in the latest quarter, the tax also has came down as per latest finance ministry's notifications. So now to the yearly results. The yearly results, the in last 10 years, if you see, the company has grown their top line by almost threefold. Like if you see, go to 2 quarter back, the company gave a guidance of 50% increase in sales for the financial year 2019-20. The operating margin has increased to 9%, and if you see the interest, company is paying back the debt, so the interest cost is going down slightly, and the current EPS is around 70 rupees. Now back to next slides. If you see, the company has 3 major verticals: engineering, chemicals and consumer products. So the the most of the margin which company makes in the chemicals, it is almost around 15%. In engineering, because it is an EPC sector, the margin is always down. It is almost 5-6%. And consumer products, the company is losing money, although the company claims that the loss has come down, but it is still losing money in the consumer sector. The only solace is that the top line in the consumer product sector is going up. Now we go to cash flows. Cash flow, if you see, the company in last 3-4 years, company is generating very healthy amount of cash flows, and those cash flows has helped company in investing in like future expansions and all. And even for in last year, the company has paid a significant amount of debt, that is around 80 crores. Now Iron Exchange Limited, like the company is improving its scale of operations. Now, just a general thing, like for the industry as a sector as a whole, as per the Central Pollution Control Board study, only 37.5% of the sewage is treated in India. Also, 60% of the industrial waste is treated in India, and out of the 60%, the 40% plants are not even meeting the environmental standards. So there is a huge scope. The government is putting down regulations so that the manufacturing companies make zero liquid discharge, so that they recycle the water internally. So there is huge scope. The company is an established leader in this sector. The other thing is, with the government new scheme, the government wants to provide water to each household. So the water demand is expected to grow up by 21%. So if you see, based on these things, the water demand, the water purification sector is also going to be up, which will lead more chemical consumption, as well as it will generate more sewage also. So water treatment has to go up. So companies in both the sectors, so which is quite good for the company. Now, the most other thing, if the water demand goes up, and if you see the our river water, so what I feel is the demand of desalination plants will also go up. So company has already built many desalination plants, so they have impressive portfolio. So there is high chance then if in future if those desalination plants are awarded, so company might get new projects on desalination plants. The other thing is in the chemicals, which is the highest margin generator for the company. So the company has said that the in the chemicals, specifically in resin, they are hitting the 90% capacity. So they are going to invest around 50 crore rupees, so for to expand the capacity of resins. For other chemicals, their capacity utilization is around 65%, so they are not putting money in expanding the capacities. Consumer products, the company is still loss making in this vertical, but the company has indicated that they are trying to increase the volumes and turn around this vertical by end of next financial year. Coming to pros and cons of the company, the pros of the company is consistently paying dividends for last several years, and the current dividend yield is around 0.61%. The promoter holding is approximately 44%. Rakesh Jhunjhunwala holds approximately 4%, and he's holding it for many several years. And the other big thing is the promoters have increased their holding by 1.18% during October 2019. Please note that this 44% does not include this 1.18%, and this is just 20 days back. The promoters have increased by massive 1.18%. The company claims that the cost of borrowings is low because they do a significant amount of exports, and the company's margin has currently increased to 9%, which company says that it is due to increase in scale of operations. So the more the turnover, their fixed costs does not increase in that rate, so that's why their margin are increasing, and they also claim that they are going to increase the margin even further with the increase in the sales. The other good thing about this company is if you uh, compare with their competitors Vartec back, so the company's cash flows are superior than their competitor. And even if you see, despite the bulk of their revenues come from the engineering EPC divisions, generally the EPC companies does not have a very good cash flow. So as compared to that, so that is a good thing. The only con which I could think of the company, because it is a very bright sector in which the company is operating and the company is growing very fast. The other thing is the company got a Sri Lanka order of 1200 crores in 2017. The company is currently executing the order. Because of that order, the top line has gone up. The company says, but did not provide any more information about the bidding pipeline, but they said that they have several, they are bidding for several large projects, and they are confident that they will get it. So however, uh, if they do not get a large order, say 1 year down the line, so we might see a decline in revenue, because the Sri Lanka project will get over and there will be no big project to fill that capacity. Now coming to our final review for 2020, The Ion Exchange is available at CMP of around 742 rupees, a PE of 13, and market cap of 1088 crores. As per my opinion, this sector will uh, attract large investments like Jal Jeevan missions, piped water supply to every home, and this in turn will generate sewage also. So the company is in both the sectors. Historically, company shares have traded between 18 to 22 PE. The company, like I have already explained, that company intends to grow in 50% CAGR in current year, and next year also they have indicated that they will grow in double digits. At least I expect that not 50, but they might grow by 25-30%. The company sales growth for the past 3 years is 10.2% and profit growth is 62%, which indicates that the company has turned around the operations and they are increasing the margins. And company may post revenues of 2100 crores, net profit of 136 crores, and EPS of 116 by year 2022. So our final verdict is the price of this company may go over 2330 rupees based on a PE of 20. This can be an approximate 3x opportunity from 2 years perspective. This is a low risk stock and probability of price fall is low unless the whole market dips. However, we have to keep tracking the new orders so that the top line keeps growing. Otherwise, if the top line falls, there is a chance then company share price can also fall. Now, think this was all from our side this week. Thank you, friends. And if you liked our video, you can subscribe to our channel by clicking on the link below blue colored arrow. And thank you and see you next week. Bye bye.